Hi everyone, welcome to Value. So today we're looking at Upstart, and can you just see that? That's just insane. Negative 61.5%. That's I'm lost for words. Like, you think markets are bad, but like Upstart, like the results weren't bad. Like, they pulled back a guidance, and all of a sudden the market's just trading as if the stock was the new Peloton. It just looks crazy how much it's just sold down because firstly the results were good for the first quarter. Um, they did pull back things and the guidance wasn't as great, but still, like, it's still a really good guidance. Like, the company is still growing at a healthy rate. So, it looks really oversold at this point because, I mean, if you pull back guidance, then yeah, that's very fair for the market to punish you, but not to this extent. Like, that is massive punishment on this stock today. It's likely, compounded because everyone's just shorting it as well. So, looks like today is going to be like a lot of selling. Like, to be down 61% is a lot. It's basically at that territory where it's just like, oh, actually, should you just be buying the stock at this moment? Because it's like things are bad and you probably didn't want to buy, and then now the stock's literally down 61%. So it starts to look like stock that's worth buying now because it's gone down so much in value. Like, if we go back to the guidance, which is what a lot of people are focusing on, basically $1.25 billion for the guidance. But so they're basically at this current valuation of $2.5 billion. They're only selling at 2 times revenue, which is crazy. Like, if we go back a year, like, the stock, can you believe that? In October it was $390. So it's selling at less than 90% of that. Can you imagine that? Like, this is the tough and rough part of the market sometimes, where you buy something at the peak and then you're basically paying for it all the way till right now. This is, yeah, I think it's clearly overblown. So definitely something that's worth looking at buying into, if particularly if you can hold through the volatility of the current market, because the current market is not nice. The current market just treats everything. The minute you report something that's not as nice, everyone is after you. Everyone is shorting you, selling you down. And yeah, like, there's a lot of pressure on the stock right now. I expect it to just rebound after this. Like, 61% is a lot to be down. Like, it's actually in that territory where it's just like it starts to get silly not to buy the stock. Um, just just merely because the company's still in a really good phase. It's still growing at 50%. Like, they're treating this company as if it's not growing, or it's negative or something like that. Like, I think this article might get sum up some of the points. So as it puts, Upstart said it expects revenue for 2022 of about $1.25 billion, down from previous forecasts of 1.4. So, they're pulling back from 1.4 to 1.25, which is not that much in the general sense. Like, if they went 1.4 and then they're pulling back to, like, 8 or 900 million or a billion, then you might kind of feel like, oh, that's quite a big pullback. But 1.25, it doesn't seem like that big of a, blowout. And then for the next second quarter, Wall Street had forecast about 335 million, whereas they are forecasting around 295 to 305, which again, not that big of a pullback. But yeah, the markets are tough right now. Like, anything you do wrong, or if the market kind of interprets too much, then yeah, you get punished. While this year is shaping up to be a challenging one for the economy, we know the drill and we're confident we can navigate whatever 2022 and beyond might hold. So this is from the CEO. So he's basically pulled back the guidance, and his reasoning was, given the hawkish signals from the Fed, We anticipate prices will move even higher later this year, which will have the effect of reducing our transaction volume, all else being equal. So in a way, they're being very, very prudent around this situation. CEO thinks, okay, we're pulling back the guidance to a level that we think we can navigate in. So in a way, it's kind of nice that you have a CEO that's being realistic about things. And when he's being realistic, he's only lowering the guidance from 1.4 billion to 1.25. So, that kind of signals the worst. So at this kind of pricing, you're actually pricing in literally the worst things that could happen to the stock. And he goes further to comment, given the general macro uncertainties and emerging prospects of a recession later this year, we deem it prudent to reflect a higher degree of conservatism in our forward expectations. So you can kind of see that, everyone is kind of being a bit more conservative. If you be conservative, then you can't be too wrong in that aspect. Analysts at Citi downgraded the stock to neutral from buy and cut the price target to $50 from $180. So it's a big U-turn. Like if Citi's giving it a $50 target, markets pushed this down to $30. So like way lower than what analysts are targeting. It's likely just basically a lot of people holding and enough panicking. A lot of people fear losing a lot, which they are losing a lot. So they just sell, and it compounds the pressure, and it continues to go lower. So we're basically at that territory where, it's just insane. Like I'm gonna look at the RSI. Like, what's the RSI at? It's at 50. So 50 is not like, in that general aspect, it's not oversold per se, but we can look at the pricing and we go, yeah, that's oversold. Like, it's irrational to be down that much for a company that's actually profitable and still growing at about 50% after a conservative reduction in the guidance to be more conservative with the expectations. So you think about it that way and you go like, yeah, like it looks really oversold. Like, if you didn't mind holding for the longer term, then yeah, like this is a stock to be buying into because it's still a really good stock. Regardless of what's happened, like you can see the stock's slightly rebounding now, like it's negative 60%. Just I don't have a full explanation entirely, if it's warranted to be down this much. Like, for me, it doesn't make sense. Like, they pulled back the guidance, but it wasn't horrible, Like, if they said, oh, we're not going to grow, then perhaps, but still, you're looking at a really decent company that's a profitable company, and it's still, it holds a good amount of cash at $1 billion. So no fears that it's going to have to raise money. It's not losing money, so it's actually profitable. So there's no fears around that. The cash flow was negative, like over 250 million negative. So maybe that wasn't that great. But the fact that management can see that things are going to be tougher means they're going to be much more prudent around how they approach things. So I don't expect losses in cash flow to be as big going forward. Like, they're likely to be a bit more conservative around how they act. Which is like, you're kind of looking at this and going, it's pretty hard to justify any stock to be down 60% unless it's Peloton, unless it's like negative, unless it's literally reported the worst things ever. Mind you, the stock might have been considered to be high in value, because a lot of people do expect a lot of good things from them, which they are producing good things. Like, you look at other stocks, and if other stocks said they're growing at 50%, you would still think that was really good. But the thing is, Upstart just set these really high expectations when they grew from like In 2020, they went from over 200 million to last year where they went over 800 million. So this was a extremely high growth stock, hence why the stock was selling in the hundreds. And then now when growth is kind of slowed down to 50%, which is, mind you, which is extremely good on another stock, but we just have some really high expectations here, and then the community just kind of pulls back immediately on the slow growth, and I guess with some fears of recessions, and particularly in the loan market, that maybe some people won't be able to pay back their debts, or that people won't be borrowing as much. Then there is some fears around this market, but still, you're looking at Upstart, who really is there just to be approving loans. They did get into the whole idea of holding some loans as well, but I'm sure they're probably adjusting their position and trying to reduce their risk how in terms of how they go about their business. So I don't think things will be as bad going forward. And it's probably fair today. Today you're gonna see a lot of pressure on the price. Likely you're gonna see a rebound tomorrow. I'll be very, very surprised if this stock continues to drop below 30, because it is really, really oversold. Like, that could just be my view and my perspective. Let me know what your thoughts are. Like, do you think it's oversold? Because it looks really, really oversold. Like, not to be dramatic or anything, like, it is oversold. Like, like, it's at that point where it's like, okay, well, it looks like people are panicking. People just want to get out, cut their losses. And then you've got this situation where it's like, people who want to buy, they're not buying because it's that situation where everyone's scared that it continues to fall. And that's very, very fair. Like, everyone wants to buy at the bottom. They don't want. They'll be looking at this and going, it's dropped a lot, so we're looking at buying this, but we don't want to buy just yet, just in case if it drops another few more dollars. Then you want to buy at the very, 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 very bottom. Everyone's literally just like hovering their mouse over that buy button, but not buying yet. And then once everyone kind of feels like it's bottomed out, then you see a rebound in the pricing. That's what I suspect is going to happen. But we'll see what goes on, because I think it's pretty insane, particularly with a stock that's actually profitable, holds some decent amount of cash, has been proven in the last couple of years that it's a good quality company with a some good business. Even though the growth rates won't be growing as quick, they still will be growing at 50%. So overall, there's a lot of positives about the stock, but of course, it's just a bad environment, and the market hasn't, reacted too kindly in terms of their reduction in their guidance. But overall, the stock's a good one, and right now it looks very, very much overblown. But like, if you can justify why it might be worth this or even less, then I'd definitely like to hear that. But if you agree that it's oversold and it's worth buying, let me know as well. If you got any questions, post below. Until then, good luck investing, everyone, and it will be interesting what happens next with the stock.